Mr. Wynaendts, thanks for joining us for this discussion of Aegon's first quarter results. Overall, they're pretty much in line with what the market expected, with the exception of the decline in net income. Could you talk us through what the cause of the decrease was?
Yes, we are indeed pleased with our results in this first quarter. It's a solid set of numbers in terms of underlying earnings, in terms of sales, but also in terms of maintaining a strong capital position. As to net income this quarter was affected by losses on our equity hedging. And as you may remember, we have put in place hedging to protect our capital position for adverse market scenarios. And in the first quarter, with equity markets rising as much as they did, 11% for the Standard & Poor's only, you see then that it had a negative impact in fair values and affecting net income.
You refer to sales being strong again in the quarter, particularly in your core business of life insurance and pensions. Give us some insight into what the key drivers there were.
What we are seeing is a continuation of the strong momentum which started to build up last year in terms of new life sales, in terms of deposits and pensions. Let me now take you through each of our markets. For example, in the Netherlands, we've had again a good quarter. We've had a lot of new pension contracts. This is in line with the development we're seeing in the market, where individual companies are looking for ways of insuring their pension liabilities, and we obviously are well positioned there. But also in the UK, we see that our sales are up, have been up significantly. Again, that's the momentum which we saw building up last year. If we now turn to the US, in terms of life insurance, we've had to take some action to reprice or even withdraw certain lines of products that we felt did not make sense anymore for both our customers and for us. And that's why you see that life sales are a bit lower than they were last year, but still we are seeing a good momentum in those new products that are much less sensitive to low interest rates. In terms of deposits, that means our pension business, our variable annuity business, but also mutual funds, we've again had a very strong quarter with deposits up to 10 billion euros for the last quarter. All in all, I'm very satisfied with it, but what is probably equally important is that we are adding clearly positive value despite this low interest rate environment. The value added, so the market consistent value new business last quarter was much stronger than the previous quarters, confirming again that our strategy of focusing on growth but on profitable growth is the one we're executing on.
Your capital position remains strong, and clearly you have sufficient capital to more than maintain your AA financial strength ratings. Will you be looking to deploy capital anytime in the near future, given the improved market conditions?
Our capital position indeed is strong, but I'd like to repeat again here that a strong capital position is at the core of our strategy. As I've said many times, a strong capital position, certainly in this uncertain environment, is not a luxury, it is a must. So we'll continue to focus on maintaining a strong capital position going forward. And at the same time, we will be seeing and trying to increase as much as we can our organic growth within our businesses. We have strong franchises, we have the possibility to expand our scale, and we're seeing that in each of the markets in which we operate, we've had strong sales increases, and that is the focus of our growth going forward.
Let's talk a moment about Spain. You've just exited your third and largest bank joint venture. How will you grow your business in the Spanish market going forward?
We have indeed exited our largest joint venture, the one with Aegon, at favorable terms. This effectively completes a restructuring of our business in Spain. In the past, we were focusing on regional distribution agreements with the idea that we would achieve national coverage. Well, as you know, the environment has changed very significantly in Spain. The financial markets and institutions also have changed a lot, and that has forced us to rethink our strategy. That's why we exited our regional agreements. We were able to realize an amount of 1 billion euros of proceeds, and we have reinvested part of it into our distribution agreement with Banco Santander, which is, as you're aware, the largest bank in Spain, with over 4,600 branches, 12 million customers. So we have effectively now a strong capability associated with a strong brand name, and that should give us a lot of potential going forward to grow our business in Spain.
Aegon's UK business looks to be on the way to being a turnaround story with strong increase in sales coming from the new platform introduced following the retail distribution review. Is it too early to be confident?
We're clearly seeing positive signs in our UK business. First of all, we have executed on a very significant restructuring, which has led the UK to be focused on the workplace and retirement areas. Two areas where we believe we have strong positions and we can leverage these positions to position our well for the future. So in the UK, we have not only reduced our expenses, but we've also made investments into new capabilities which are necessary in a new environment, the post-RDR environment. And I can share with you that I'm particularly pleased to see the trend, and the clearly very strong trend in selling products on this platform. We've also been rewarded 2 out of the 3 awards, prestigious awards on our platform capabilities, and that is positioning us much better now than we've ever been in the past years.
And finally, is there anything we can expect on the horizon coming from Aegon in the next several months?
What you will see Aegon doing is consistently executing on a strategy. I think we've embarked in a very clear direction, which was first to restructure our business and then to position ourselves for the future. And when I say position ourselves for the future, it's about adjusting our business model to a new reality, the reality of where we need to get much closer to our customers, where we need to connect with our customers, and we can do this by leveraging all the possibilities new technologies are offering us. So we will not only execute on a strategy, we'll accelerate investments in technology, we'll accelerate investments in all the means which would allow us to get closer to a customer, because that's at the core of our strategy going forward.
Very good. Thank you, Mr. Wynaendts, for your time.
Thank you.